Namaste and welcome back traders. Yesterday's session in the Indian equity markets started with a promising rally, building on some of the positive momentum from previous day. However, as the day progressed, we saw a significant portion of those gains evaporate, leaving us with a more muted closing. So let's break down this intraday volatility and examine the key factors at play. The Indian benchmark indices showed early strength with buyers stepping in during the initial hours of trading. However, the momentum couldn't be sustained throughout the session, leading to a noticeable pullback. The Nifty 50 index closed at 24,666 levels, registering a gains of 88 points, which translates to a modest increase of 0.36%. While still in positive territory, it's important to note that the index gave up a significant portion of its intraday gains. Similarly, the Sensex ended the day at 81,330 levels, rising by 182 points or 0.22%, also showing a similar pattern of an early rally followed by a partial retracement. This suggests some profit booking or perhaps renewed caution entering the market as the day almost wore off. The broader market indices generally supported the initial upward move, with several sectors showing good gains. The metal sector was the top gainer yesterday, surging by a robust 2.46%. This could be attributed to positive global commodity prices as well as strong demand outlook or specific company related news within the sector. The realty sector also showed good strength, gaining 1.70%. There was a continued positive demand trends, majorly due to lower interest rate expectations in the coming month to be reduced from the Reserve Bank of India. The IT sector also participated in the initial rally, jumping by a healthy 1.34%. The rally majorly could be because of positive cues from the US tech sector overnight and also renewed buying interest after some recent consolidation. The oil and gas sector also saw positive momentum, gaining 1.22%, likely influenced by global crude oil price fluctuations and the sector specific news. The pharma sector, on the other hand, also closed in a positive territory, up by a modest 0.57%, often considered a stable sector during the market volatility. Now let's take a look at the global markets, which presented a mixed picture, reflecting a tug of war between bullish and bearish sentiments across different regions. On the Asia front, we saw a divergence in the performance. Hong Kong's Hang Seng led the gains with a strong jump of 2.3%, and China's Shanghai Composite also closed in a positive territory, up by 0.86%. However, Japan's Nikkei ended the day in the red, down by a marginal 0.14%. This mixed performance indicates varying regional factors influencing investor sentiments. European markets generally closed in negative territory, although the losses were not substantial. Germany's DAX was down by 0.57%, France's CAC was also down by 0.47%, and the UK's FTSE closed lower by 0.21%. So European market's downward trajectory suggests some caution or profit booking in the overall markets. Overnight in the US, we saw a mixed performance. The Dow Jones closed slightly lower, down by 0.21%. The Nasdaq Composite, however, showed strength, rising by 0.72%, while the S&P 500 ended with a marginal gain of 0.10%. This divergence often points out to sector-specific movements, with the tech stocks showing great relative strength. Now let's quickly dive into the charts and understand how the markets are expected to move in today's trading session. So we are in the Nifty 50 intraday chart or maybe the daily chart. So as you could see, the markets or the Nifty, in fact, showed a big green candle, and then there was a reversal of roughly around 70% that shaved off. And then yesterday we saw immediate pullback or support coming in at this exact levels, which we discussed that now this is the range that we will have to trade in. If at 24,500 levels the support emerges, then we would it would be good to go long. So that is what yesterday we had seen. Immediately once the market opened, we showed positive strength and then continued one way kind of rally, and then towards the afternoon we saw there was a selling pressure that came in, and then suddenly the markets touched the lower point and then recovered from there and closed almost in the 50% retracement level from the today's high. So overall, we see that the buying had emerged at the lower levels. So there is an expectation that the Nifty is expected to open flat or slightly positive based on the Gift Nifty's initial signal. And then from here on, if the positive momentum continues, we might, trade for roughly around 200 odd points on the higher level and close the initial previous high what we had made the previous day or previous to previous day. There are high possibilities that we might approach towards those level, provided all the sectoral indices also support. So overall, for Nifty today in today's trading session, and since there is a expiry too, we have to trade cautiously. Primarily, the momentum is expected to be on a positive side, and then we can expect a one-side rally to continue from 24,670 odd levels to cross beyond 24,800 odd levels in today's trading session itself. So if that happens, then we are expected to open for a upward movement for the next weekly expiry. So today's trading session is going to be quite crucial for Nifty, because that creates the foundation for the new leg of higher opening. So overall, if we start trading below the yesterday's close, that is 24,666 odd levels, then we could see some selling pressure coming in, and we might trade in this entire range of yesterday's low and high. So overall, the expectation is Nifty to be trading in a positive momentum. Now let's see from the perspective of open interest. So on the open interest, as you could see, there are only call additions that had happened at the higher levels. So beyond 24,666, that is at 24,700, 24,800, 900 and 25,000 in the initial stage, and beyond that all the other strikes at the higher levels, we saw uh, good open interest additions on the call side. So on the put side, if we see at the lower levels, then at 24,500 there emerges a strong support, and even at 600 there is kind of tug of war between the calls as well as the put writers. So Nifty is surely expected to take a strong support at 24,600 to 24,500 odd levels. In case if the market opens positive and immediately starts trading on the lower side, these are the levels we have to crucially look upon. So if we see these are breaking out, then there could be some sell off that would come in, but that is not expected immediately. However, on the long side, since we do not have significant open interest positions that got added yesterday, definitely there would be a possibility for Nifty to push on the higher levels and maybe panic the call sellers who would have taken positions yesterday. So 24,700 would be the first level where it would approach, and then start if there is a positive momentum that continues to build in, we would start approaching the higher levels and move towards 800 and even 900 odd levels. Since there is expiry, we could see a lot of positive momentum that is expected to come in today. On the PCR front, overall it is at zero point 0.7, which is positive, and then PCR at the money is 0.67, which is again bullish to positive. Moving on to Sensex. Sensex also had a similar kind of trading pattern. However, we see kind of a doji that got created on Sensex. So compared to Nifty, it was not that strong. But again, at the lower end of yesterday's trading session is where we opened and then immediately moved on the higher side. And then in the afternoon we fizzled out because of no continuous buying that had happened, and that selling pressure led to make the lows in the Sensex, and then towards the end of the day there was a 50% recovery that had happened. So now it is expected that the market again opens positive today and continues to trade on the long side and approach towards the previous day's high, that is 82,000 odd levels. So if that happens, then we would open for the positive momentum for the next week. But yes, compared to Nifty, there was no significant, buying interest that was seen on the Sensex, and in fact, there was not that kind of strength that we could see. So today's trading session would be a key decider on how the Sensex is going to shape up for the coming week. So majorly, we expect the trend to be positive given the overall, indices traded in positive yesterday, barring maybe the banking stocks. So on the broader market, since there was a good strength that continued, so it is expected that this trend to continue even today, and we could approach or trade on a positive momentum. So if Sensex starts trading lower, based on yesterday's close, then we could see the selling pressure to come in, and then we trade in this yesterday's zone itself. So overall on Sensex, 81,400, 500 odd levels is going to be crucial on the higher side, because that would open the new leg up for the further upward trajectory. In case if market start trading below 81,300 odd levels on the Sensex, then we would have some selling pressure coming in, and then that would take the Sensex to the yesterday's lower end, around 80,900 or 81,000 odd levels. Let's see from the perspective of open interest. So of course, yes, we could see a lot of open interest positions got built up yesterday, and since we were telling that compared to the call side, the put side remain, sorry, compared to the put side, the call side remain quite strong, and at all the higher levels you see there is a significant open interest positions that got built up on the call side. So at every 500 odd levels you see a significant open interest positions that is available, which definitely signifies that there is some pressure that is going to be built in as the Sensex starts to move higher. So at 81,500 odd levels is going to be crucial. In case if Sensex shows positive momentum and sustains the higher level, then we could see some put writing that emerges at 81,500, which would definitely give strength to strength fight to the call writers, and then we might see because of the overall positive momentum that could expect to continue on the higher side. So we could see a lot of put writing also that had happened, and then here as well at 82,000 odd levels you could see put writing has already got initiated, and if we stay firm at the higher levels on Sensex, that in itself suggests that we are expected to move further beyond and approach towards 82,000 odd levels. So now let's see from the perspective of PCR. PCR stands at 0.8, overall, and then 0.7 or 69 at the money. So which is bullish to maybe positive. Now moving on to Bank Nifty. So Bank Nifty, however, shows a different picture where we have a bearish harami kind of pattern that had got created. So this suggests that there is a support that emerged at the lower levels. However, we have to see how the opening is expected to happen today on the Bank Nifty. If the opening would be somewhere at 55,200 odd levels, then we could see the positive momentum to continue from here on and approach towards the previous day's high, roughly around 55,600 odd levels. And if that sustains, then we will open for a next upward move towards approaching 56,000 odd levels. Now on Bank Nifty, it is going to be quite key, and we are anticipating that in this particular entire expiry or the month, we will trade in this range from 54,800, sorry, 54,500 odd levels to 55,500 odd levels in the initial stage. Once we cross 55,500, we will start trading in this range of 55,500 to 56,000 odd levels, and then that would open the trajectory on the higher side for Bank Nifty for the next up move beyond 56,000 odd levels. So Bank Nifty definitely is in the crucial phase. If it sustains and creates that strong foundation at the lower levels, then we could see there are easy up move that could be seen on the higher side. Now let's look from the perspective of open interest. So open interest still stands quite strong despite Nifty closed yesterday below 54,800 odd levels. We do not see significant open interest position wind up happening on the put side. Rather, we see the call side open interest had been wound up slightly, which suggests that at higher levels, definitely there is going to be a strength that emerges from the put writers, and we are expected to continue on the higher trajectory on the Bank Nifty. So could be yesterday's sell-off be one-off kind of situation, and then from today onwards we could see that recovery coming in, and Bank Nifty is expected to trade positively overall and approach towards 55,500 odd levels as the first leg. And then if this sustains strong and we see the emergence of the put writers coming in to support, then we might move towards 56,000 odd levels in no time. This could just happen in a day or 2 days time. That's it. So let's see. The next week is going to be again quite crucial. If today and tomorrow Bank Nifty sustains at these levels, then it will open for the next movement towards 56,000 levels and beyond. So overall, Bank Nifty maybe yesterday closed in negative. However, on the open interest side, it is quite positive, and at every lower level we see good support emerging in. Just that we will have to sustain 55,000 odd levels. Maybe today open positive and sustain those levels. Else, if we could again see a selling pressure coming in, and it would push lower towards 54,500 odd levels. So let's see from the perspective of PCR, it is 0.8, which is quite bullish and positive. At the money is also 0.85, which is positive. Now from the perspective of FINNIFTY, even FINNIFTY is trading negative, at least from the perspective of last two trading sessions, and the yesterday's overall previous 2 days overall strong bullish candle got fizzled out. So we are just maybe 200 points away from the previous day's big candle. So if today FINNIFTY takes a support at wherever it had closed, or the yesterday's high, if it opens positive and then starts trading above those levels, then that should be considered as a positive trend, and we could move forward and approach towards the previous 2 days high. So if that happens, then we could see a positive momentum that had built up on the NBFC stocks, or maybe financial services stocks, and that could emerge as a strong support for the next up move in FINNIFTY. In case if FINNIFTY opens lower somewhere in this range, wherever it closed, and then shows negative sentiments there, then we could approach below 26,000 odd levels, which is definitely going to create a panic in the FINNIFTY for downward movement to continue from here on. So 26,000 of course remains quite crucial, which would act as a strong support, and on the higher side 26,300 to 400 odd levels, which would act as a resistance for FINNIFTY. And if we sustain and give a good support there, then we could see we approaching towards 26,600 odd levels for the immediate stage, and then the next up move would start from there on. So now let's look from the perspective of open interest. So open interest, however, shows the slight different picture. Though at 26,000 odd levels, it shows a strong support, but there have been some unwinding that had seen at the 26,000 odd levels yesterday, despite we just approach to those levels, and then immediately saw the up move coming in. So now we have to see how the FINNIFTY is going to in fact trade tomorrow. So overall, we expect that we trade today in the range bound, and then if this sustains, then tomorrow again we would be seeing some positive momentum coming in. But we have a good resistance at 26,500 odd levels. This is the zone from where we have been seeing selling pressure coming in and pushing it down towards 26,000 odd levels. So the key crucial point would be to cross first 26,500 odd levels, and if we sustain at those levels, only then we would be in a position to move on the higher side. So some pressure is seen because these call writers are putting some pressure at the FINNIFTY and not letting it sustain or move beyond those levels. Once we significantly cross 26,500 odd levels, then we are open for the next up move. Just that each time whenever FINNIFTY approaches towards 26,000 odd levels, we have to sustain those levels and consider that as a strong support for the buying momentum to begin. Looking at the perspective of PCR, it is 0.7 overall, and at the money it is 0.83. So despite on the open interest bars, it suggests some negativity, but on the PCR front, because of these positions at the lower strikes what we could see, and at the higher strikes what we could see, uh, and in between if you see at the money strikes, it shows quite positive strength. So overall, FINNIFTY is also expected to open maybe in the positive and then continue the momentum from there on. Now lastly, this is going to be quite interesting to see how the FIIs and DIIs have been placed based on the yesterday's contribution from their end. So on the index futures, FIIs have been short, and they continue their short positions to the tune of 35,000 odd contracts. On stock futures, they have been holding long with 18.21 lakh contracts, which is quite bullish. On call options, they are long with 1.4 lakh contracts. However, on put options, they are again long with 1.47 lakh contracts, which suggests that they are not expecting positive momentum to come in on the indices. And today being Nifty expiry, we really have to see how the FIIs are going to play out. So net FIIs have not been carrying any significant positions. They are just short by 7,900 odd contracts, which is not that significant, and decisively does not support anything on the long side. On the proprietary traders, on index futures, they are mildly short with 29,000 odd contracts. On stock futures, they are long, mildly long maybe, and these positions have been continued from a very long time. So that's okay. On call options, they are long with 1.09 lakh contracts, and on put options, they are again long, slightly with 17,000 odd contracts. So net, I think it is the DIIs who are driving this, because they have been holding positions to the tune of 92,000 contracts. And yesterday's, pullback, what we had seen, definitely had, led the proprietary traders to gain a good amount of money. And if that positive momentum continues even today, since proprietary traders are holding the long positions on the index options, they would be the biggest gainers. Now let's see from the perspective of clients, or what retail traders are doing. On the index futures, they are long, though FIIs and proprietary traders are short. On the other hand, DIIs, or maybe the retail traders or the client are long. So we today have to see, because of Nifty expiry, we might see some volatility coming in. But if it trades, on the positive side, on the index futures, the retailers would definitely, gain. But let's see from the perspective of options. So primarily on stock futures, they have been, holding long positions to the tune of 17.13 lakh contracts, which is, quite bullish. On call options, they are very bearish, and have been holding 2.49 lakh contracts um, on short side, which is quite significant. However, they have offsetted that by writing the put options, maybe towards close to at the money or below, and they have shorted 2.13 lakh contracts on the put side, which suggests that they are expecting the markets to move up. So overall, the retailers have been short with 35,000 odd contracts. So if Nifty or overall, major indices move higher, the retail traders would be losing, and then the proprietary traders would be the winners. So today maybe we could see a significant shift in the positions immediately if the Nifty starts trading on the higher trajectory, because there would be losses that would be seen for the retail traders, and cutting down of their positions would add to significant movement to happen in Nifty. So overall, uh, retailers have been short on the index options, but we have to see how the action would be taken today. Now from the perspective of cash markets, uh, DIIs have just taken positions for 316 crore in the cash market, which is okay to positive. However, there have been three times kind of positions that have been grabbed by the uh, FIIs in the cash market. So that itself shows that there is positivity, and they have bought at the lower levels yesterday, and they would ride today as well on the higher side, and support the index in case if we see it opening lower end, or maybe trying to approach the lower levels. So we could definitely expect significant buying interest to be seen at the lower levels. So overall, both DIIs as well as FIIs have been holding long positions in the cash market, and on the uh, derivative side, it is the proprietary traders who are actually pulling off strong at the lower levels, and have been supporting every time it approaches towards the lower side on the indices, and that is when we could see a good buying strength that had emerged, and there is a support coming in from the proprietary traders at all the lower levels. So overall, yeah, yesterday's session in the Indian markets was characterized by an initial rally, but that unfortunately couldn't sustain its momentum, with significant portion of the gains being given up by the close. So there was a support that came in from the broader markets at the lower levels, but yes, the subsequent fizzling suggests some caution or profit booking at the higher levels. But in case if the markets open higher today, so that trend on the positive side is expected to continue, because yesterday there was a good buying that had happened at the lower levels, so that would act as a strong support for today's trading session, and from here on we are expected to continue on the higher side. So this is what we could anticipate on today's Nifty weekly expiry to happen. So just put it across your thoughts on today's market action, how it is expected to be, and whether would you play bullish or bearish. So share your insights in the comments below. If you found this analysis helpful, please like this video and subscribe to our channel for the daily market updates, and hit the notification bell to stay informed. So trade cautiously, as today we have Nifty expiry, and we will see you in the next video. Thank you.